Hi, this is Tim Wegman with BIS Commodities. Taking a look at the week in review. This the second week of D's 14. Let's start out and see where things close for the week. We'll start with the core market down 3/4 of a penny at just shy of 385 in the March contract. December expired today. January beans down 16.5 cents on the week, just a hair over $9. March wheat closed just a little over a penny lower, right at 5.30. Livestock markets, December cattle up $1.67 on the week at 119.57. These hogs went off today up 80 cents, just shy of $55. Looks like oil's going to be a little bit weaker, roughly $150, or excuse me, $1.50 a barrel, that $51 area at this time. It looks like the Dow's going to close lower on the week, maybe around 350 points lower at this time, around the 24,100 point area. Looks like the dollar had a strong week, up almost 100 points, around the 97.40 area. Taking a look at the core market this week, still stuck in this trading range we had from the past 2 weeks, ever since we gapped this thing higher 2 weeks ago Sunday night, 380 to 387. 87 being the high this week. As far as a lot of information this week, the main item was the monthly supply and demand report, and usually it's a ho-hum report, and that happened to be the case again this year, as we did see the USDA just tweaked the demand side of the equation a little bit. They decreased ethanol demand 50 million bushels, thus we pushed our carryout number up to 1.78 billion bushels. That's up from 1.736 last month. We usually don't see anything, or we've never seen anything happen on the supply side of the balance sheet in the month of December. We'll get our final numbers next month. We'll get our final crop production numbers. Taking a look at the world stocks, we did see a small increase in world stocks when the USDA comprised all their numbers. Taking a look at the technical aspect of the market right now, again, as what we said, we did gap higher a couple weeks ago Sunday night. That gap still exists down below the market, so we've been trading in a very narrow sideways trading range here. The gap down below holding support, and 390 being a resistant area on the top end of the chart. That's an area we hit back in October and early November, and have not yet hit that mark yet here the month of December. So that is probably a target right now for the technicians to take a look at. Locally, we are seeing basis widen out here a little bit in Cedar Rapids, Iowa, as we're around 22 under for cash, and that's probably somewhere between 8 and 10 cents wider than it was last year at this time. So kind of interesting. Maybe the warm weather has something to do with that. Taking a look at the soybean market, China still is the main driver as far as news is concerned. What's happening with the tariffs? We did finally see some confirmation this week that China was in buying some beans. We got some confirmations the last 2 mornings at 8 o'clock that they've purchased roughly 56 million bushels from us the last 2 days. And at this point, the trade is probably looking for that 5 to 8 million metric ton range. That'd be 200, maybe 250 million bushels of bean purchases. That's what we're looking for, and maybe it is yet to come. We'll see next week. We did have the S&D report, and that was nothing there. In fact, we left everything alone. There wasn't any changes on the demand side of the balance sheet, so we still have a 955 million bushel carryout. We did increase the world carryout because analysts, both the USDA and CONAB, Brazil's version of the USDA, did increase production estimates in Brazil, and we did see the USDA increase production estimates in Argentina as well. So we did see a bigger increase, obviously, from the world perspective. The trade blew that off. As the concern still going to be is how much is China going to buy from us, and is anything going to get resolved as far as the tariffs are concerned? There is a reduction in automobile import tariffs into China, but we're seeing nothing yet as far as soybeans are concerned. So that is certainly what we're going to be looking forward to next week, the beginning of next week, to see if we can continue to see more purchasing of soybeans. I think the trade will be disappointed if we don't see more to come in recent days. So as I mentioned earlier, we gapped higher a couple weeks ago Sunday night. That gap still holds below the market. This $8.95, $9 area is probably an area of resistance. Anything below that, we fill the gap. Maybe you see a little bit more selling pressure come into place. Moving on, taking a look at the livestock markets, cattle. This week, cash has traded a little bit here today. The 119 area, that's steady from last week. We're probably going to see a bigger balance of it traded yet later this afternoon or tomorrow. Interesting that we are seeing boxes virtually doing nothing for the week as well. Down about $1 on the week, right around 212.72, and not much movement there as far as price is concerned. And so it makes you wonder if the packers are getting their needs covered at this point as far as Christmas or not. The futures, on the other hand, continue to be able to push higher, as we did see us testing the top end of the recent trading ranges for both the April and the Feb contract right now. There is a seasonality that we do see again in February cattle. April cattle into the second half of December. But again, we are sitting right here at the top end of this range. We did make lower lows, lower highs on the close today. It does look as if maybe we are getting a little bit overbought here as far as futures are concerned. I think how cash ends up this week may be the driver into the beginning of next week, and we need to see those boxes continue to hold in here. Taking a look at December hogs, the Dees hogs expired today. About $10 below $10 below the Feb contract. So we have a $10 premium to Feb. That makes it a $10 premium to cash right now. Historically, that is a wide premium with the December futures expiration. That may be supportive alone in itself. Cash for the week was actually down a little bit, about $1 this week, somewhere around the $47 range for cash. And as we move forward, one has to take a look at the technical side of this trade. Looking at the February contract, it's 64 has been able to find some support on the bottom end of this range. 69 is the high, and we bounced off 64s here Thursday. Nice follow through today. For the most part, I think I'm selling on the upper end of this range here in the Feb and or some of these deferred months right now. We know we have some of the swine flu priced in, as you see a very good premium into the summer months. So I think if you get back in the top end of those ranges, it certainly warrants to get some type of hedge protection in place. And we'll see how the swine flu plays out. If it's really a concern right now in China, you could see a lot of the producers liquidating, putting a little pressure on the country there as they are moving pork out, which means that maybe later on down the road, as we turn into that January, February timeframe, maybe we do see some premium come to our markets. China has been in the buy pork from us the last 3 weeks on the weekly export, so it does feel positive moving forward. So if you have any questions about these or any other markets, please feel free to give us a call here at BIS Commodities at 1-800-373-2525.